On 5th of August 2025, Tinubu signed insurance bill into law. That's the insurance industry bill into law. And what followed was a massive appreciation in the insurance sector. And if you look at what happens in the insurance sector from that fifth, the insurance sector index went from 885 basis points to reach a high of 1,700 basis points. That's almost 100%, with some insurance companies delivering close to 150, 200% or more. Now, someone sent me a question and said, um, I couldn't buy insurance stocks because a lot of them were on full bid. And I was also concerned because some other insurance stocks that were available didn't have good fundamentals, yet their stock prices were going up. And some, the ones that had good fundamentals, couldn't buy them because they were on full bid. And I think I was focused more on the stocks with good fundamentals. So, what is the best way to actually pick Nigerian stocks? Is it fundamental or technical analysis? So that leads me to this particular video, which I want to share with everyone. What is the best way to pick Nigerian stock? Is it technical analysis or fundamental analysis? So I want to share what works. If you have been losing money in the market, you're struggling to buy stocks, or you are always used to jumping on every stocks that your broker mentioned, because they said that it has good fundamentals, and then suddenly the stock drops. At the end of the day, you would understand why you always lose money with your broker recommendation. Not because your broker is wrong, but because you have been trading the right stock in the wrong way. So a broker that sends you recommendation would advise you to hold for a long time. And in short, the truth is that your brokers are actually trying to make money off you, because your brokers only make money when you buy or sell. So when they send you those recommendations, these recommendations were more of long-term investment, because when you look at the approach they used all the whole DCF, whatever. I'll talk about that. Now, I want to tell you what actually works in Nigerian markets. This video should settle everything that has to do with trading and investing in Nigerian stock. What works? What is the best to pick a stock that you can be confident enough to hold, that you won't be scared of selling, even if price drops by 10% or 15%. So in this video, I want to show you the best way to pick Nigerian stock, the best way I have adopted, the best thing I do that had helped to grow my portfolio this year. And I also want to show you what actually works in the Nigerian stock market. Investing in the Nigerian stock market is not a rocket science. If you know what you're doing, you will make good money in the market. So far, between January, for those that have joined our portfolio community in January till date, this is my G30 stock track in the Glofolio community. This is it here. This is what we have recommended. Now, these are not buy recommendations, because some of these stocks have moved. These are our recommendations for G30. Now, some of these stocks you see here, I have traded these stocks multiple times. I've even leveraged the power of compound return. Now, I've not even updated this tracker. So I'm only looking at the price when I recommend the stock and what they are selling now. I didn't even factor in the compound return, meaning I will sell, I will re-enter again, I will sell, I will re-enter, I will sell, I will re-enter. So this is what it takes to be in the market. And this tracker, up to date, has actually outperformed the Nigerian stock markets. Like I told you, look at it here. Our G30 tracker is up by 67.1% January to December. Like I said, I've not even updated the prices. By the time I update it, that's what we're having our next September section. Now, the NGS market is up by roughly 37 to 40%, meaning that despite look at the big rally in the NGS, we have outperformed. So, meaning if I go by my tracker, if my G30 tracker was an index, I would have outperformed the NGS stock market. And my portfolio personally has even doubled whatever you're saying here, even far more, because I leverage compound return. There are stocks that once I notice a significant rally of maybe close to 100%, I'll sell back and then I'll wait. Once they drop again, I will re-enter and then I'll move on. So what exactly am I doing in this market? I want to show you, I want to tell you the best way to pick stocks. So if it is the first time you're watching my video or visiting my channel, kindly hit the subscription button and turn on the notification bell because there's a lot to learn. I don't post videos regularly. You may not see me post videos every day, every week. Why? Because I am busy running a research for my private community. So most of the videos, most of my values are delivered to my private community. So I can only come here once in a while to share what I think will make sense for you and work for you. But if you want to get value from me every day, every week, every month, join our private community. We host monthly webinars. I share updates. And then you can also go to the Glowfolio platform to see what I've recommended. While I'm not posting here, I have dropped stock recommendations. You can see right here, even up to August 25. And today is 28, 3 days ago. I dropped a recommendation August 12th. You have them. So I'm always dropping recommendation. This month I've not dropped any YouTube video, but you can see so far I've dropped some recommendations, like 3 recommendations. 1, 2, 3. Now this particular stock here has rallied so high, dropped again. I think 3 days ago or thereabout, I told them to re-enter the stock again. These stocks, I made over 125% from this stock. It dropped. I told them to re-enter, and this stock is actually finding support at important key level, and fundamentals are very okay in the same insurance space. This particular stock has huge upside potential if you go by fundamentals. So let's continue and let me show you what works in Nigerian stock markets. Now, please always read my disclaimer. The ideas shared in this video are based on my personal research and calculations. Kindly do your due diligence before you invest in this company's stock or whatever stock I mention or I analyze. The stock market comes with a lot of risk due to uncertainties, and please make sure you vet my recommendation based on your risk profile. So let's continue. A lot of people buy stocks blindly. They don't know whether they are investing or trading a stock. If you go back to your portfolio today and ask yourself, whatever stocks you have, did you buy them for trading or investing? They are different. How you react to a stock largely depends on whether you are bought for investing or trading. So the NGS has just stopped a new all-time high. It's not seen in years. Look at NGS markets, like almost 140 something thousand basis points. Look at the NGS, almost reaching close to 146. And then you see how the market has pulled back. I'm expecting a pullback. Yes. In short, if the pullback is significant, I'll be happier because it's only when market dumps that I'm going to have more buy opportunities. If market has extended like this, then I have to be concerned because I buy more at the bottom of the market. Before the market broke out of this key level, you can see here, this was where I started dropping recommendation. There were many stocks that I dropped around this April, and they are done exceeding well in the market. So let's continue. Now, FOMO is driving market rally with some company stock extremely overvalued. In short, one of the signs of FOMO is you're going to be seeing random YouTube videos 10 Nigerian stocks that made me money. If you had bought stock A in January, by now the stock would have given you 10 million. If you have used 1 million to buy excess so stock, by now, these are FOMO posts. Why didn't it tell you those stocks? You know, I usually say this. If you want to know a professional trader or a profitable trader, they don't come to the plat, they don't come online to say XYZ stock sorry, 3 or 4 stocks you would have bought. No, they would tell you when the stock was at the bottom. They will tell you how they spotted the stock before they move. Before you go subscribe or follow any YouTube channel, I want to note this. Investing or trading are not skill. Knowing how to invest and how to trade, they are not skill. It is profitable investing and profitable trading that is a skill. So investing is not a skill. Trading is not a skill. It is profitable investing and profitable trading that is a skill. So anybody can invest. Anybody can trade. Anybody can buy a stock and sell. And then you see 100%. And then he comes to YouTube and be excited and say, how I made 100% return. No. Profitable trading is more of consistency. How consistent are you? When you buy and sell a stock, can you repeat that return in the market? So these are the things you will learn right here. So in this video, I will tell you what to do and how to know whether you should be buying a stock or selling a stock. Now, first thing is you must understand your objective in the market. If I ask you what your objectives are in the market, can you tell me with precision why you are in the stock market? What exactly are you doing in the market? Are you in the market for income? Did you buy stocks just to collect dividend every year, irrespective of whether prices are up or down? Or are you buying stocks for short-term capital appreciation, capital growth, in such a way that once your stocks are up by whatever percentage in 3, 4, 5, 6 months, or even up to 12 months or 10 months, you sell off? So you must tell me with precision why you are in the market. If you cannot answer this first question, you have no business buying and selling stock. You are a gambler. You're not a trader. You're a gambler. You follow every stock that is mentioned on media platform. Second, do you know why? Do you know your risk profile? You have to sit down and understand. When I had a section with them in the last webinar, I told them, you must understand your personality in the market. You must know who you are in the market. Just the same way you start a business and you want to describe your ideal customer, you must describe your ideal customer and say, my customers are this, they are that, they work here, they do this. If they are not working, this is where they are. You must be able to describe them in human form. Not saying, oh, I want to run a business. You must describe their personality. You must see them. You must have an imaginary image. So that even when you walk past the person or when you find yourself in an environment where people are talking and then you're trying to understand, you will be able to spot who your customers are by just the description that you have in your head. So you must also understand your risk profile in the market. Why are you in the market? Well, I always advise my students to profile their risk by looking at their age range, their income, and experience. Three things that will help you profile your risk: your age range, your income, and experience. There's an age bracket that you will be. You don't have any choice. You must adopt income approach in the market. Your objective should be income, conservative. Someone in his 50s cannot be saying I'm aggressive. Aggressive towards what? Okay, your income. Whatever you are investing in the stock market, is it your all? When you can't come to the stock market with your all, like your everything, your home and abroad, as they always say, and then you want to be taking an unnecessary risk. So if your income is low, you don't have maybe like alternatives of income is not, let's say it's limited, and you're investing everything you have in the market, you have to be very careful. Don't say, oh, because I know someone who can pick stocks very well or have a good strategy. No, you must be careful. But if whatever you're coming to the stock market with is just a percentage, maybe an insignificant part of whatever you're coming, then you can be aggressive. Because if anything happens, you still have some cash left. Then your experience is also key. You can't tell me that you're coming to the market as an aggressive person and then you don't understand the risk in the stock market. You have not even studied. Oh, I'm in the market for some people tell me I'm in the market for capital growth. I'm in the market for aggressive growth, aggressive income, and then your experience cannot even match it. You know what it means to be aggressive in the market? Can you absorb risk? Do you know how to calculate your risk level? Do you know the type of risk? Every stock has its volatility range. We call it beta characteristics of a stock. Do you understand them? So if these three key parts of you are well understood, then you can easily tell. For someone who is in his 30s, in his or her 30s, yes, and then he's coming to the market with income, and then with money, and that money he's coming with is not even all and these are all and all. Maybe he's still working, right? And then his experience in the market is also tight, like very good experience. Then he can take an aggressive risk because you understand everything. So even if you have huge high experience, you are sophisticated in market. Number one, I put more weight on age. If once you're in your 50s or 60s, then you have to cut down on your aggressive move in the market. So understanding your objective is very important, and I would advise that you use this to carry out self-assessment and then look at what your risk profile is before you go ahead to invest in any stock. Now, trading versus investing, don't forget, we are looking at the best way to pick a stock. Is it technical or fundamental analysis? So now, trading versus investing. Once you understand your risk profile, you are able to tell whether you are in the market, whether you should be trading or investing. In trading, you buy a stock for short term. with holding period running from 1 week to 12 months. In investing, you buy a stock and hold beyond 5 years, from 1 year, 2 years, 3 years, 5 years. So that's investing. I'm going somewhere. So what I take away from all these that I've shared so far, in Nigerian stock markets, you know, something usually happens that I want you to look at, and we'll be using that to discuss trading and investing. And then I'll then take you back to first question on whether you should be doing more of technical analysis or fundamental analysis. And remember again that we had earlier talked about a breaking news that moved the insurance sector, which was Tinubu signing the insurance industry bill into law. So I'm going to connect everything together. Now, in Nigerian stock markets, stock prices usually go up before breaking news or turnaround results are being released, at least 90% of the time. Remember what I said? Stock prices, recall what I said, stock prices usually go up before breaking news or turnaround results are being released, at least 90% of the time. Your job as a trader, what is a trader going to do? You are buying for short term, right? Your job as a trader is to learn how to spot internal footprints, point of interest using price action because it will capture the reversal before the media. What if I tell you that this news, Tinubu signs insurance industry into law, had already been factored into insurance stock, insurance industry since May? It was signed in August, right? What if I tell you that the markets had already started pricing this news since May? I'm sure you'll be surprised. How did I know that? Well, the truth is that I don't trade with the media. I don't use the crowds to trade. The May here, right here, this was where the market started pricing in. For those that had joined my ETC section and the private section, go and check this NGS insurance index setup in May. I usually teach a very simple technical setup, very simple, that can tell you when a stock is about to move, that shows you one single pattern that precedes market rally. So that buy signal was already captured in May, meaning that people have started buying insurance stock ahead of that signing. See, you don't think that the day they brought the bill to Tinubu's desk, that's where he will sign. No. Even if you go by common sense, see, I always say that common sense investing is not common. If you go by common sense, once they bring the bill to the presidential palace or whatever stable, you think he will sign? No. He has aides. He has people who would also study the bill and advise him. He has people who will go through the bill, review every lines, have sessions with him, and then talk to him, update him, because you can't be pending signature on random. I'll tell you because National Assembly approved it. No. So there are people who are advising him, who are letting him know that, okay, your excellencies this is what's going to happen, this is what's going to happen, and it's going to be good for Nigerian economy, and it's actually part of your drive to move Nigeria into a $1 trillion economy, and then he's going to do it, and then so that will most likely happen between May and, well, I'm not saying that the bill was actually brought to him in May, but I'm telling you when the buy signal, when I spotted the possibility of insurance index surging higher between May and June. So this huge rally you see here was just FOMO. Everybody jumping in. That's why a lot of stocks went on full beat. People were jumping in at the same time. Oh, the media. Remember what happens in media? Media creates FOMO. It is the media that creates FOMO. So once the media announces it, that people are saying, oh, it will help to boost insurance, it will. So that collection of positive perception, impression is what was responsible for this big rally. But between May and August, they were gradual entry. The index was moving. If you go by my technical setup, you will see that we had a perfect ETC buy setup around that period. That's in the whole insurance industry. What does that tell you? If you master technical analysis, you'll be able to spot ahead. It's in line with what I shared here. And it has happened multiple times. I remember when I bought CWG, the same thing. CWG went from 69 kobo. Let me see how I can show you. CWG went from 69 kobo to reach a high of almost 1 naira. Let me see if I can find that chart, that move. I didn't know what happened. I was still wondering. This is it here. You can see the horizontal line sitting here. Went from almost 69, yeah, within this range, and then it touched a high. I didn't know what happened to almost 9 naira. What happened? I didn't know. But technical analysis was telling me something is happening, something is happening, something is happening. And then the stock started picking up. It was later on when I had a one-on-one section that I got to understand what happened to CWG. Now, a lot of banks were adopting one of their software. And if I check software revenue was moving up. So Nigerian market stock prices usually go up before the breaking news. Another example, insiders. You can't tell me that people were not aware that something was coming. You can't tell me. You can't. There's no way. You can't tell me that people were not aware that Tinubu was going to sign insurance industry bill into law. We're already aware now. Insiders. So that would have been reflected on the index itself. So what would give you, a retail trader, that edge you need in the market? Understanding technical analysis. We will come to that part later. I'm just trying to share something with you. So I said Nigerian stocks usually go up. So why did I say this? Because if you're in the market to trade, don't think you would make money if you rely on the media. Don't think you make money if you usually buy stock when everybody's buying. Tinubu signs insurance industry into law. This is a news that will instantly be available to millions of people at the same time. So what edge do you have in the market? That's why you saw that. Look at the rally. Some people entered even right at the at the top of the market, and now they are asking, should I sell? Should I sell? Should I sell? One perfect example of a stock that had the same chart pattern, which I even posted on my YouTube channel, was Sovereign Trust. For some of us, I remember when I posted about Sovereign Trust and how we made us understand that Sovereign Trust will blast higher. Now, not because I saw the move to come up. I didn't expect the move to get to this extent. I need to go up for my technical setup. But because the chart pattern of Sovereign Trust aligned with that of the insurance industry. So one of the strategy I usually use whenever I want to buy a stock, I always check the industry index. What is the chart pattern of the whole industry and what the stock is saying? So the one that is close to that industry index is what actually, if the industry is flashing a buy, a buy, if there's a sign that the industry index is going to rally higher, and then I usually look for stocks that are closed. Let me give you an example. Yesterday, I sent a stock to all private members of my community via email. Now, some people don't know why I recommended that to stocks. I had a one-on-one section. And guess what? In the banking sector, see, the banking industry banking index will still go up. Banking sector index will still go up. Now, the question is, which of the stocks will lead the market rally? We don't know. We don't know. So if I say the banking sector index will go up, what I do is I usually look for stocks that have the same pattern as the overall banking index. That is the stock that will lead the rally. Not stocks that have, so if an index is going to rally, it's not all the stocks in that index that will do well. You must look for stocks that has a chart pattern closely related to that market index. That will give you an idea, which was why if you look at my post on Sovereign Trust, I mentioned that here. I said it has the same chart pattern as the overall insurance index. This is it here. I mentioned it. I mentioned it. I mentioned it. Let me see if I can find that particular write-up here. Okay, here. So you can see, as I shared, is the insurance sector index broke out of a 3-month high after bouncing off with today's close comfortably above all my what I. This is the bicycle. This is the sign that insurance sector index was going to rally. And don't forget when I posted this here. This was June 2021. the bill was signed in August. And in June 2021, I had already spotted what was going to happen in the insurance sector. I see, as I shared, this the insurance index just broke out of 3 months high after bouncing off. So confirm this is a strong indication that buyers are mopping up insurance stocks again. I didn't know it was the insurance sector view, but technical analysis will tell me that something is happening. So I knew there was an indication people are going to be buying insurance stocks again in June. But what was going to be a major driver? Well, I wasn't aware. But the setup on chart, the footprint of elephant was visible. And now, penny stocks to watch. So you can see here. Do you see? Now, look at another right up here. I said the penny stock, that's sovereign trust. The penny stock has the same price action with the insurance index, a clear sign that if the sector continues to attract buyers' interest, it will benefit from positive sentiment. So the rally that you saw on sovereign trust was not a coincidence. It was not a big mistake. I knew sovereign trust will shoot higher in line with the overall insurance index because it had the same chart pattern. Technical analysis take you far if you are a trader. Now, as a trader, you should be more focused on demand and supply volume in the market. So if you are in the market for trading, you should be more focused on demand and supply volume because it tells you when price is about to go up or down. This is why I prefer technical analysis more than fundamentals. If you are a trader in Nigerian stock market, and you know what the trader does, you plan to hold your stock between 1 week to 12 months. 90% of what you need to be a profitable trader is technical analysis. The best way to pick a stock in the stock market is technical analysis. That means out of 100% of the work you need, spend 90% understanding demand and supply volume in the market. Spend 90% understanding price action. Then the other 10% is fundamental. The 10% that is fundamental is quality analysis. It's not just look through financial statements. And if you look at the 10% of what you need to run your fundamentals, they are not even on financial statements. Those that have joined my one-on-one session will confirm. The real figures that you need to carry out fundamental analysis as a trader, they are not on financial statements. Yes, if you go through a financial statement on a stock exchange, like typical financial statement like this, let me launch one and show you, they are not there. So it means that you have been looking at the wrong figures all along. Many of you will just look at revenue. Oh, did it grow? Yes. Profit, did it grow? Yes. And then you say, oh, this company is doing well. I have no doubt that your numbers are right. I have no doubt your numbers are right. But the bulk of, let me see, you can look at UCAP financial statement now. The bulk of the numbers you need to check whether this company is a buy for growth, like trading, they are not on the financial statements. This is UCAP financial statement here. Here, look at these numbers. You see these numbers? You see, yeah, these are the visible numbers. There is what I call the invisible figures. They are not here. You won't find them. But they are the one that will take you, that will help you see far before others. You will see what others are not seeing. And these are the numbers that insurance investors, data analysts, research firms spend most of their time looking at. So don't think that as a trader, you don't need technical fundamental. You need fundamental. But the fundamentals you need, analysis you need, which is just 10%, they are not on financial statements. These numbers here will just provide the data. They only give you a guide on what you need. But the real numbers, you will use this to calculate them, but these are not the numbers you need. So when you are going to the market as a trader, you must go with your level, you must arm yourself with the right information. I have bought stocks of companies that had lagged if you use fundamentals, but led top gainers in 6 to 12 months because I entered early. I bought stocks that ordinarily, when you look at the fundamentals, it's a no-no. You would think I'm like, I don't even know what I'm doing. You even call me beginner, a novice, maybe because you think you have all the financial certifications and all that. But these stocks have led gainers in the market. When I spotted Dangote Sugar at 38.40, the fundamentals were nothing to write home about. When I spotted NASCOM, the same thing. And there's also another stock I posted recently, the same thing. But the technical setup alone is already confirming that something is happening. The technical setup already is confirming that something will happen on those stocks. Why? Because before those numbers, those results are released, before the breaking news, the market has already captured it. See, Nigerian stock market, you see the stock prices you see, they are futuristic. They have captured what will happen in the next 6 months. People that know what will happen. So if you want to get in early in the market, you must be able to think like that. Like this stock now, buying this stock on dip will pay off in 6 months. It's on dip. Everything about the stock will just discourage you. Some of you are even at loss. That's even the interesting thing about the stock. This stock is at loss already on some portfolio because people bought them. People bought the stock at the top of the market. When they started saying, oh, this stock did over 200%, 300%. This stock did over 300, 400%. And now the stock crashed. People lost money. So if the stock starts recovering, people that lost money will just want to sell off, just to lock in their capital and say, ah, thank God, I recovered that money, my money. Maybe because they needed money at that moment. Now, some of us are buying back from there. Then later on, when they see that the stock has rallied high, they want to re-enter again. You must master technical analysis as a trader. Settle this and you will see the difference. If your broker sends stocks to you and you plan to trade that stock, you need to understand demand volume, supply volume in the market. If supply is more than demand, don't buy. If supply is more than demand, don't buy. That's why you don't see me post stock recommendations every day or even every week, because I am very careful not to post stocks that have huge downside risk. I don't recommend stocks with huge downside risk. It's only when stocks have moved, you'll be seeing the weekly recommendations. They don't look at demand and supply volume in the market. And you are buying those stocks thinking that in the next 2 weeks it will rally higher, and then you see the stock drop. Now, even if those stocks go up, it still does not mean you were right. It still doesn't mean you're right. Yes, you can buy stock at the middle of a rally and go, but what happens? Why can't you buy it at the bottom of the market? Why can't you buy it before they move? Why can't you spot them before the big rally? Why should you enter at the middle of the rally? Oh, because it has done 50%, 70%, then your broker is telling you to go and buy that to go up more. Your broker is a FOMO. Your broker is encouraging you to FOMO on stock, fear of missing out. Why can't you buy it when nobody is seeing it? And then the moment you enter, in just space of 3 months, 4 months, it peaks. These are the real traders in the market. How to check for volume? You can always check. Volume is really available on Nigerian Stock Exchange websites. This is it here. Look at the volume. You can always use this volume to run a check. There are times when I will see a stock, I will see smaller volume, and suddenly I will see an unusual volume, especially if that stock has been dropping. Like the stock has been dropping for the past 1 month, 2 months, 3 months. And then I suddenly see a reversal and I check volume. And then you will see, for example, let's say this stock, 500,000 units, 200,000 units, 700 units, 200 units, 300 units, 200 units. And suddenly you are seeing 2.8 million units. It's unusual volume. And then the stock closed higher in the last 7 days. That's volume. So I usually use NGS platform to spot reversal, especially at key levels with clear signs of positive close in the last 1 week or month. This strategy worked for NASCOM. You can see an example of NASCOM, Dangote Sugar, Prestige, Sovereign Trust, blah, blah, blah. Even my recent recommendations yesterday was another example. So you must master technical analysis. Technical analysis is the unknown fundamentals. That unknown information, because you are an outsider, what will give you access to that company's information is technical. You just know. See, you are aware that something, being aware that something is happening is an edge, even if you don't know what the exact stuff. But knowing that something is happening on this stock is an advantage alone. It's not compulsory that you must know the exact information. Oh, it's because Tinubu wants to. No, knowing that something is coming very soon is an advantage. That's why I started pushing everybody to a particular stock sector. That even that sector, from my analysis, looks like a big run in 2026. So that means right from this month, August 2025, I'm already looking at the sector that will do well in 2026 based on chart setup. You must have like and most of the news or media has already pointing to that particular sector. So when we enter now, and then we hold the stock maybe for the next 6 months, 7 months, 8 months, 9 months, or 10 months, and the stock start going up, and many of you are entering at that moment, you will be surprised that many of us had keyed in long ago. It's as simple as that. When we enter Guinness at 66, 65, 66 naira, it was a no-no for you if you look at it, because Guinness was a loss-making company. But within that period, I told everybody to buy Guinness. Those that joined our platform last year will tell you that we entered Guinness at 66 naira. Yes, on the platform. We entered Guinness as that was the period you would even have thought of entering Guinness. This is it here. This was where we entered Guinness. I told them, go and buy Guinness, go and buy Guinness. I may not have full information. Yes, even though at some point I felt that certain things, events may play out, and whichever materializes would be bullish for the stock. Number one, the listing the stock would definitely would require the company's owner to pay shareholders premium. And then the other part is if they don't delist, oh, they already have a distribution channel. So instead of having double distribution channel, they will close one and integrate with the existing one. So meaning that marketing expenses will be a lot more lower and all that. Now, that doesn't mean I had full information on what might move the company up. But there could still be some other information that I was not privy to. But technical analysis had already helped me to capture both the known and unknown. That's the advantage of carrying out technical check on a stock. You are factoring both the known information and the unknown information, because those are the things that are driving sentiment. And you are not in the market to compete. You are in the market to follow the money. Follow the money means you are understanding, you are looking at what the real movers are doing. Who is winning this war? Is it buyers or sellers? And then look at from 66 naira to reach a high of 151. Now, some of you will be entering at 140, thinking to continue to rally higher. But some of us entered at 66. We enter right before the major rally. That's the edge we enjoy in this market. So, technical analysis versus fundamentals. Like I said before, technical analysis will provide better insights if you are a trader seeking capital growth or want to buy low and sell high. So if you are a trader in the market, you want capital growth or capital gain or capital appreciation, master technical analysis. The only advantage of fundamental is that you will see the actual growth behind the positive momentum. And that's just 10% of the energy required to trade. I've talked about that before. So that 10% that you need to carry out fundamental check is just to understand why. What is the factor? What are the catalysts behind this growth? And those numbers are not even visible. Many of you will be surprised if I start saying this, that why you say, what are you saying? Why are you telling me those? Yeah, majority of the numbers that we need, they are not visible. If you had been part of one of my, I've had one-on-one section with you or my ETC, you will understand what I mean here. In ETC fundamentals, we do a lot of calculations to find the 10% that would give us, see, the confidence that come with this 10% alone, the confidence that come with the 10% alone will make you to buy that stock on dip. Even if the stock dip, the fact that this 10% is intact, forget the rest. They're just opportunities. I usually tell them that there's only one reason why you buy a stock, and I've said it before on this channel, but there are many reasons you sell a stock. So you buy a stock because you think it will go up, whether technical or fundamentals, whether trader or investing. But when the stock dips, when the stock is passing through sell-off, there are different reasons people sell a stock. Number one, it could be that the company is not good. Yes. Number two, it could be that they need cash. Number three, it could be that you want to divest. So it's not every sell-off that is bad. It's not every sell-off that depicts a problem or impending challenge. Some sell-off present opportunities. Learn to spot them. Some could be because the person that sold the stock need cash. If I have an emergency to sort, and the only place I could get my money from is stock market, and I'm a major investor, or I want to divest, and I put a stock for sale and the stock is going down, it's natural for people to think that something is wrong with the company. So you learn to spot opportunities like that. Learn to spot a sell-off that is not driven by fundamentals. That's what this 10% has done for me. As an investor, you should use more of fundamentals in your analysis. So if you're in the market to invest and hold the stock for a long time, you should use more of fundamentals in your analysis because it reveals companies that are resilient, strong, and may survive economic uncertainties in years to come. Technical analysis will not tell you companies that will survive uncertainties in 10 years. So if you are planning to hold that stock for a longer period of time, 10 years, 20 years, 15 years, what will help you is fundamental analysis. Fundamental analysis will look at the historical cash flow of a company, project the future cash flow based on current risk and future risk, then value the stock using a modest risk adjusted discount rate, maybe 20 or 30 year period. That's what fundamental will do for you. You want to buy a stock, or you are worried that the company may not survive the next 10 years, 15 years. Make a fundamental analysis of that stock. Begin to look at what the cash flow is like. Begin to look at what the business of that company is, what they sell. If it's a product that is in demand, I'd mentioned three stocks you should buy and hold forever. You can see the kind of analysis I carried out on that stocks. That's fundamentals. You can even break it down into financial statements. Look at the historical cash flow. And most importantly, pay attention to risk. Don't be too excited that the company will go up. Look at risk. What are the possible risks that the company may face? So competition, ability to survive competition. If a new competitor enters today, can the company survive? Do they have an internet advantage? Look at them. If customers begins to cut down on disposable income because of lower income, because they are struggling, or Nigerians, can the company still survive? There are products that even if you decide to cut your expenses down to zero, you will still chase these products. Food, household products, healthcare, utility, gas. Even if you say, I'm not going to be spending money again, you will naturally chase this product. Look at risk when you are trying to hold a stock for a long time. So that's where fundamentals come in. I usually invest in companies that have a track record of consistent growth in sales, profit, and cash flow. Consistent growth in sales, profit, and cash flow. So example of such company, let's look at a company like, let me go to invested.com and show you an example of one company like that, so that you have a better understanding of what it means to invest in a company. So let's look at a company like, okay, this is BUA Food here. So let's look at BUA Food right here. BUA Food. So once you look at the historical records of BUA Food. So this is BUA Food. Oh yeah, all right. So this is it. Now, you go to financials, you can see here, income statements. So remember what I said, I usually look at companies with record of consistent growth in sales, profit, and cash flow. So these are some of the things I check. So look at BUA record here. You can see, look at revenue, 333 billion, 418 billion, 729 billion, 1.5 trillion. Can you see that's consistent growth in sales? And then you can even see the revenue growth, 72, 25, 7,400. And then you then look at the profits of that company too. Look at the profits. Let's look at the profits of BUA Food. You can see here net income. You can see net income growth, 97%, 30%, 22 and 137%. You can see here. So you already have the data, right? See, that's what we call consistent growth. So when a company has a record of consistent growth in profits, sales, profit, and cash flow, and then are able to manage their debt level to near zero with interest expenses fully financed by operating margin. This is just part of the things you need. So you can see that the data you need to carry out a check on a company's financial statements, they are also available as a fundamental analyst. So when you are analyzing a company results, look at your objective. Am I trading this stock? Then I really don't need all this, like all this. Just need few things. Am I investing in this stock? Yes, I may need all this. So understanding your risk profile is very, very important. So that I don't jump from one stock to another, asking yourself which is better. So back to our question. If you are trading a stock, the best way to pick a stock is technical analysis. So if you're in the market for capital gain, then you must master technical analysis. But if you're in the market for investing, holding for a long time, then you must master fundamental analysis. That settles it. So this type of news, only technical can spot them. Now let me show you another news that is driving my investment bias in the market. That's helping me to position that already I'm positioning. That's this next news on business day. June 25, 2025, Tinubu to sign 4 tax reform bill into law on Thursday. Many of us saw Tinubu sign insurance industry bill into law. We know this sector to run to. Do you know the sector that is going to benefit from this particular bill? 4 tax reform bill. Do you know? I've been recommending stocks. I've been talking about certain stocks in this sector. I've been talking about stocks to watch in that sector that will benefit from that bill. This stock is number one here. This stock, once you're able to know this industry here, then you move to the next one. That stock is number one. Then this particular stock is also there. Let me pick that stock. Let me look for that. Yes, this one, this one, this one. Once you know these stocks, these two stocks, you can see August 12th and August 2025. So these two most recent recommendations right here, I see them as companies that are well positioned to benefit from this tax reform bill into 2026. I'll be shedding more light on this in our September webinar. I'll be talking more on this in our September webinar. So you can see how technical analysis is already helping us to position our portfolio ahead of others in the market. You must learn to love breaking news like this. So if Tinubu signed insurance reform bill and insurance sector went up, which sector will benefit from this tax reform bill? They are all reform bills now. What's the essence of reform bills? The restructure. And reform bills, Tinubu cannot sign a reform bill that will not benefit the government. There's no way they will sign a bill that will benefit. So if the government is going to benefit from it, which sector will, this is it here. That's why you see these last two recommendations. For me, I'm holding them because of this tax reform bill. The industry they are is, or in short, the chart pattern of that industry already says it all. The chart pattern of that industry. Technical analysis will give you the edge you need in the market, especially if you are trading. So I hope you got value from this section. And if you want to join our community, you want to know that stocks, you want to jump on these stocks, join our Glufolio community right now. You want to catch the hottest stock market, Nigeria stocks benefiting from this trend at the bottom. What is the trend right now? Tinubu to sign 4 tax reform bill into law on Thursday. I'm sure he has already signed it. So who is going to benefit is actually these two recommendations right here. So this is an opportunity for you to jump on stocks that are positioning themselves to benefit from this event in Nigerian stock market. Go to glofolio.com/subscribe, pick a plan that works for you. We host monthly webinars. Yes, back to back. We've been having webinars from January, February, March, April, May, June, July, and August. So looking forward to seeing you in our September section. Thank you.